Hey guys, what's going on? This is Hala Pablo. Mic working, camera rolling. Okay, good. Quick Bitcoin update. Okay, so here we are. We are at the top of this channel, aka wedge. We could draw like a parallel support and resistance trend lines on this and get it pretty straight to make it look like a channel if we wanted to. Of course, we have the overbought areas here where we currently are, and then the oversold areas down here, which kind of go beyond the support and resistance lines. And if you wanted to loosely draw a line through the, tracing the tops of the tops and the bottoms of the lows, then it would look more and more like a wedge. So, but we're just gonna keep it like a channel for now. Keep those straight lines. We are up on the top, just like we talked about. We knew we were going up here, and but we didn't know how far beyond macro trend resistance we would go. So it turns out we went right beyond it again. It looks like we're doing another peak, another head and shoulders. What we're seeing now is what I call horns of the devil, up at trend resistance, which is an indicator of a impending markdown back into the channel, aka wedge. We see the horns of the devil. We see this one up thrust here, and then we have the second one here. It's more like a UTAD. Now, we see that a lot. We see horns of the devil up at macro trend resistance in many places here. It's basically two up thrusts side by side. Sometimes the second one exceeds the first one, and it's basically another attempt by the bulls to flip the resistance to support and start another leg up from here where it marks up proper. We haven't seen that. Instead, we've seen more stoppage supply come in. This right here is a huge indictment against the bulls right here. This stoppage supply was basically what I call a cock block candle. It just came in and it brought the price right back down into the into the channel with resolution, and no more have we seen large demand buildups at that point. So this is an indicator of the price action riding the trend line with a bias for bearishness. And so we see that. We see these these cock block supply bars coming in always at trend resistance, and this is the omen of a further markdown. Oftentimes, what the market makers will do is they'll try to create FOMO, even though they know they're going down. The idea is not to pump it up and start a new whole trading range and another leg up, another reaccumulation up, but it's actually the top. But before they begin the markdown proper, they have one good FOMO rally to entice retail buyers to come on in. And what they're doing is they're generating liquidity. They're trying to sell it. I mean, who wouldn't want to sell it at the top? I mean, these guys bought down here and they're selling it as high as they can. They're marking it up as much as they can. And retail usually jumps in. And guys, that's what creates the head and shoulders that you see. The head being the FOMO rally, and then the shoulders being the first shoulder is the reaccumulation, and then you've got the head, and then you have the redistribution is the second shoulder, and that's what makes up the head and shoulders formation that we're seeing, which I believe we're seeing right now as well. It hasn't played out yet, but it will. It will most likely. So you see that we've come right back down to the trend resistance point here. We could consolidate a little more here, but eventually I think we're going back down into the into the channel, and these Fibonacci retracement levels are where we can reasonably expect the price action to sink back down to. Now, the 1.618 would take us to 30,005. I'm expecting 30,005. Those of you who have been watching this channel know that I'm I'm actually I'm expecting at some point this counter trend, this large counter trend that we're in, to break on the macro, and then when this breaks on the macro, we may go up for another leg. We may go up into $40,000, $50,000 Bitcoin before this is all said and done, before we take that nosedive back down to where we come down to create the second bounce of this macro bottom. Some people think that the bottom's already occurred, that this is the bottom here, that's the first bounce, and this is the second. See this Adam and Eve double bottom here. I contend that this is the micro. This is a bottom, but it's a micro bottom that paved the way for the macro counter trend, which is what we're seeing within this channel. And then this channel, which is essentially a rising wedge, is going to break on the macro, and that's going to bring the price back down to the terminal shakeout on the macro. And at that point, that terminal shakeout is going to be the real reversal, and from there we're going to see the macro bull cycle commence. And but that I'm not anticipating till maybe February, January, February, March, maybe April of next year. We'll start to see those highs again. I think this is just setting the stage for what's coming. And yeah, and what's coming is a recession. Economical recession, maybe globally, but certainly in this country, in the United States, and that's going to be reflected in the future price action of Bitcoin. And then Bitcoin's going to come back down, but not before a sizable counter trend rally. So we're seeing that right now. So I'm thinking like on the micro, we're coming back down into this channel, and then maybe do another. We may touch macro trend support down at the 30,000 to 1618 Fibonacci retracement, the 30,502, which would take it right down to, yeah, lo and behold, macro trend support, and then we may see another bounce from there back up into it, and then this is where we could reach even new heights. It doesn't mean that we've broken out and we're going to the moon. It just means that we are peaking out, or we're topping out of this counter trend, this macro counter trend that we're seeing in the form of a wedge here. So anyway, keep that in mind, guys. You can momentum trade the markups and the markdowns within this, the price action within this channel. Just be careful. I wouldn't buy up here. I definitely wouldn't buy where we are right now. Certainly not with the stoppage supply coming in. Look, supply's even building. So we have supplies building with the price going up. That's not a good sign. That's a good sign for the bears. It's a bad sign for the bulls. So, and that is perfectly normal within a rising wedge where we have price action going up, but supply also going up, and overall demand going down. We see isolated demand predominance bars, but that's just to propel the price action back up into the channel for another leg. These are orchestrated rallies by the market makers from support and resistance, playing off the fear and greed index of humans, of retail traders. So it's just cat and mouse. And it's going to be cat and mouse. It's always been cat and mouse. And basically the waves, the Elliott waves, the 1 through 5 motives, impulse waves, and then the ABC corrections, all of those, what they do, they're just a visual representation of human fear and greed. And with that, I'm gonna sign off. Hey guys, if you got anything off this, yeah, I'd appreciate a subscription. I appreciate a like, thumbs up, and to help other traders find this, if you've gotten anything. And so I intend to do more powerful, no nonsense, no bullshit updates. Just stay tuned, and we'll see what happens. And yeah, check out my TradingView account, Hala Pablo. I'll put a link in the description. 80 to 85% win rates. I plan on updating it real soon, and also providing new signals to those that are in the trading group, in my Discord trading group. Retracement signals for those who can actually short crypto or leverage trade, which we can't in the United States, unfortunately. Well, maybe fortunately for some people, to prevent them from really getting wrecked. I wouldn't short crypto on leverage, but certainly these Fibonacci retracement levels provide excellent dollar cost averaging points for those that are inclined or keen on dollar cost averaging in your favorite coins and tokens. All right, guys, let me let you go. Thanks again. Take care. God bless. Bye-bye.